Developing a winning trading strategy is often misunderstood as an act of invention, as if somewhere there exists a perfect combination of rules waiting to be discovered, copied, and applied. Trading literature written by those who have actually endured the markets tells a very different story. A winning strategy is not created in a moment of inspiration. It is grown through observation, constraint, and self-awareness. It is not something you build once and then defend forever, but something that slowly takes shape as your understanding of risk behavior and probability matures. The first step in developing a winning trading strategy is accepting that no strategy wins all the time. This acceptance is not intellectual, it is emotional, and until it is fully absorbed, every strategy will feel fragile. Many traders unknowingly design systems that only work when they are right. These systems collapse during drawdowns because they were built on the hidden expectation of consistency in outcomes rather than consistency in behavior. Trading literature repeatedly emphasizes that a strategy must be designed to survive being wrong, because being wrong is not an exception. In trading, it is the baseline. A real strategy begins with a clear definition of market context. Before entries, before indicators, before setups, a trader must decide where they intend to operate. Trending markets, ranging markets, volatile markets, quiet markets all reward different behaviors. A strategy that ignores context is not incomplete, it is unstable. Winning strategies narrow their scope intentionally. They don't try to work everywhere. They choose a specific environment and specialize within it. This specialization reduces noise and increases clarity, allowing probability to express itself over repetition rather than hope. From there, a strategy must define what constitutes opportunity. This is where many traders make the mistake of complexity. They layer conditions until almost nothing qualifies, or worse, until interpretation replaces rules. The strongest strategies are usually built around simple, observable conditions that repeat often enough to matter, but rarely enough to be selective. Trading literature consistently shows that edge comes not from sophistication, but from consistency. A winning strategy answers a simple question clearly: under what conditions am I allowed to trade, and under what conditions must I stand aside? Risk management is not added after a strategy is built. It is the strategy. Position sizing, stop placement, and maximum exposure define how ideas are expressed. Without these elements, entries are just opinions. A winning strategy defines risk before reward. It assumes uncertainty and structures trades so that losses are survivable and informative. This design transforms losses from emotional events into expected costs. Over time, this emotional stability becomes part of the edge itself. Another essential component is alignment with temperament. A strategy that looks brilliant on paper but conflicts with your psychology will fail in practice. Some traders cannot tolerate fast decision-making. Others cannot tolerate holding risk overnight. Some struggle with frequent small losses. Others struggle with long periods of inactivity. Trading literature often notes that most strategy failure is not analytical, but behavioral. A winning strategy fits the trader executing it. It allows discipline to feel difficult, but possible rather than constantly forced. Testing and refinement are where a strategy truly earns its status. This phase is often rushed. Traders test a handful of trades and declare success or failure prematurely. Meaningful testing requires repetition across different conditions and honest review of both results and behavior. Journaling plays a crucial role here, revealing whether losses come from flawed logic or from inconsistent execution. A strategy that performs well only when executed perfectly is fragile. A winning strategy is one that tolerates human imperfection without catastrophic consequences. One of the most overlooked elements in strategy development is the rule for doing nothing. A strategy without a clear definition of when not to trade will slowly bleed capital through marginal participation. Winning strategies include inactivity as an explicit component. They protect capital by removing the need to be active during unclear conditions. This restraint often contributes more to long-term profitability than the quality of entries themselves. As experience grows, a winning strategy becomes simpler, not more elaborate. Unnecessary rules are removed, indicators are reduced, decision-making becomes cleaner. This simplification is not regression, it is refinement. The trader no longer needs complexity to feel in control. Control comes from familiarity and repetition. The strategy becomes something that can be executed calmly under pressure because it has been lived, tested, and adjusted repeatedly. Ultimately, developing a winning trading strategy is less about finding the right answers and more about asking the right questions. What markets fit me? What conditions do I understand best? How much uncertainty can I tolerate without breaking rules? How do I protect myself when I am wrong? When these questions are answered honestly, the strategy that emerges feels less like a system you follow and more like a framework you trust. And it is precisely at this stage, when the strategy no longer feels exciting but feels reliable, that it begins to earn the only title that truly matters in trading, which is not clever or sophisticated, but sustainable. And this is where the deeper work continues, as the sentence itself has not yet fully come to rest. Because once reliability replaces excitement, the strategy enters its most important phase. The phase where it is no longer being designed but lived. This is where many traders stumble, not because the strategy stops working, but because they expect it to feel rewarding every day. Winning strategies often feel uneventful. There are long stretches of waiting, brief moments of execution, and frequent small losses. The discomfort here is subtle. It is the discomfort of repetition, without novelty, of discipline, without stimulation. Traders who mistake boredom for failure begin to tinker, and tinkering is often the first crack in an otherwise sound framework. At this stage, the work shifts from building rules to protecting them. A winning strategy must be defended against two quiet enemies: impatience and overconfidence. Impatience pushes you to trade before conditions align. Overconfidence pushes you to expand risk when recent results feel good. Trading literature repeatedly shows that most drawdowns come not from market conditions, but from these behavioral leaks. The strategy did not fail, adherence did. Recognizing this distinction early prevents unnecessary reinvention. Another key element in sustaining a winning strategy is understanding its natural rhythm. Every strategy has periods of expansion and contraction, weeks where opportunities cluster, and weeks where nothing fits. Expecting constant engagement from a selective strategy creates frustration. Winning traders learn to sync their expectations with this rhythm. They know when to lean in and when to step back. This adaptability is not discretionary, it is rule-based. Exposure changes with clarity, not with desire. Review becomes more precise in this phase. Instead of asking whether the strategy works, the trader asks where it works best and where it struggles. This granular understanding allows for refinement without distortion. Small adjustments are tested cautiously, not emotionally. Trading literature often emphasizes that refinement should come from patterns observed over many trades, not from reactions to recent outcomes. This patience keeps the core intact, while allowing evolution at the edges. Another crucial insight is that a winning strategy must be executable on your worst days, not just your best ones. When energy is low or focus is compromised, can the rules still be followed? If not, the strategy may be too complex or too demanding. Many traders realize at this point that simplifying execution improves results more than improving analysis. A strategy that survives fatigue and distraction is more valuable than one that performs brilliantly only under ideal conditions. As the strategy matures, confidence shifts again. It is no longer confidence in the next trade, but confidence in recovery. The trader knows that drawdowns will occur and that the strategy is designed to endure them. This knowledge reduces emotional volatility and prevents abandonment at precisely the wrong moment. Confidence becomes quiet, almost invisible, yet deeply stabilizing. Ultimately, a winning trading strategy is not defined by its edge alone, but by the relationship the trader has with it. Is it treated as a fragile solution that must be protected from loss, or as a durable process that includes loss as part of its function? Traders who succeed long-term choose the latter. They respect the strategy's limits, execute it faithfully, and allow results to emerge over time, rather than demanding constant validation. When all of this aligns, the strategy stops feeling like something you use and starts feeling like something you inhabit. Decisions flow from rules without friction. Waiting feels purposeful. Losses feel contained. Wins feel unsurprising. This is not because uncertainty has been eliminated, but because it has been accepted and structured. And it is here, in this quiet alignment between rules, behavior, and expectation, that a strategy truly becomes winning, not because it guarantees profit, but because it can be executed repeatedly without damaging the trader who relies on it, which is the only definition of winning that survives long enough to matter. If this deeper look at developing and living with a trading strategy resonated with you, consider subscribing to continue exploring the unseen mechanics of consistency, and leave a comment sharing which part of your current strategy feels most fragile and which part feels most solid right now.